Warning: these social media platforms may be hazardous to your health. Censorship kills. Pain coming. This has been a PSA by Breaking Spectre. Well, good morning, everybody. How we doing? Spectre here. It is the 22nd day of October now, Friday. Hopefully you guys are doing well. Taking on a little bit of rain here. Had a little rain in the overnight hours here in this part of the country, which is interesting because it didn't even show up on the radar last night. But nonetheless, it's a nice fall day here. Hopefully you guys are enjoying the season as we progress through the fall time here, burning through the month of October. Got a lot of ground to cover here this morning. You'll want to stick around. Going to burn through the old what's going on in the old marketplace here this morning. Talk a little bit about some cryptos, what's going on with Evergrande, fake meat, and a whole bunch of other odds and ends. But first, let me bring you this. See you on the other side. Hey everybody, Spectre here. Want to tell you about my Teespring store that I just opened up with a handful of products in that for you guys, the listeners, the audience, those that are in chat on a day in, day out basis. Always appreciate your support, and I figured what the heck, we'll throw some merch out there for you guys. And so obviously with YouTube and Earth Shenanigans as of late, I'm going to be looking to expand to other platforms, and well, that all comes at a cost, so I figured what the heck. That being said, I got some t-shirts and that out here. You can see those in black, white, and gray. Spectre Does News. Got a water tumbler, 20 ounce there. Got a coffee mug you can get in black or white. And of course, we got the Let's Go Brandon #FJB shirt, which you can also find in black, white, or gray. Right now, you can find that all over at https specters-storefront.creator-spring.com. That's https://specters-storefront.creator-spring.com. Thank you for your support. All right, jumping right in. Futures at all-time high on Evergrande reprieve despite Intel Snapchat collapse. S&P 500 futures traded to within 2 points of their September all-time high, rising 0.12% to 45.47, just shy of their 45.49.5 record after China's Evergrande unexpectedly made a last-minute coupon payment, averting an imminent weekend default and boosting risk sentiment. But while SPOOs were up, Nasdaq futures edged down 0.18% lower after Intel warned of a lower profit margins, while Snap crashed 22%, leading declines among social media firms after flagging a hit to digital advertising from privacy changes by Apple. Intel plunged 10% in pre-market trading as it missed third-quarter sales expectations, while its chief executive pointed to shortages of other chips holding back sales of the company's flagship processors. 10-year yields dropped 2 basis points. The dollar slumped and Bitcoin traded above 63 grand. Fed Chair Powell is scheduled to speak at 11 a.m. Eastern. And here we see the old graphic for E-mini S&P futures. Chinese property giant's bond coupon payment was boosted sentiment because it reduces risk to the broader financial system, according to Pierre Verret, technical analyst at Active Trades. However, this optimistic trading mood may be short-lived as investors' biggest concerns remains inflation, he said. Traders will listen intently to Jerome Powell today as the Fed chairman is expected to give more clues about monetary policy. Some of the pre-market movers today, Mattel rose 6.7% after the firm known for its Barbie and Fisher-Price toys lifted its full-year guidance amid a sales rebound, even as it grapples with a global logistics crunch ahead of Christmas. Digital World Acquisition, DWAC US, jumped 67% after more than quadrupling on Thursday after news that the blank check company would merge with former President Donald Trump's media firm. And I guess I'll pause there real quick and say there's another headline that I don't have in the docket here this morning, but apparently some people missed out on the rise of the SPAC yesterday. Some folks missed out on about 700% gains. Astonishing 500 million shares changed hands yesterday during regular hours, 17 times the number of those available for the Truth Social business. And it also says a note that the DWAC would have to reach $1,739 to be as large as Twitter. Well on its way, as this morning it appears to be trading at about $80. So very, very interesting in regards to that. Hopefully Trump and company do well. Get signed up? Well, I did. I threw it on there just to see what happens. Nonetheless, Funware soared 288% as a company which runs a mobile enterprise cloud platform is plugged by retail traders on Reddit. Whirlpool fell 2% as the maker of refrigerators reported sales that fell short of Wall Street's estimates, citing supply chain woes. Also, L'Oreal shares rise as much as 6.8% after its third quarter sales beat impresses analysts, with Citi praising the French beauty product maker's capacity to rebalance growth between different geographies at a time of worry over China. The stock posted its biggest gain in almost a year. S&D shares are the biggest gainers in the OMX Stockholm 30 large cap index after the third quarter earnings per share beat consensus by 10%, with Jefferies citing lower financing costs as among reasons for the improved earnings. Thule shares rise as much as 6.7%, most since July 21st, after the company reported earnings for the third quarter. Klépierre shares gain as much as 4.8%, hitting the highest since September 30th after the French mall owner boosted its net current cash flow per share view amid an ongoing recovery in its markets and stronger than expected rent collection. Wise shares fell as much as 5.4% after co-founder Tavet Henricus sold a stake worth British GBP 81.5 million in the digital payments provider to invest in early-stage businesses. Boliden shares declined as much as 6.1%, most since May 2020 after third quarter earnings missed estimates. London Stock Exchange declines as much as 4.2% following third quarter earnings, with Citi describing the revenue mix as marginally disappointing amid underperformance in the data and analytics division. Shares in holding company Lifco fell as much as 8% after reporting disappointing sales numbers in its dental business, missing Kepler Chevreux's revenue estimates by 18%. Some other notables here: Euro area composite PMI up October flash 54.3, previous 54.9, etc., etc. Euro area manufacturing PMI, also services PMI showing their prints. Germany composite PMI, France composite PMI, and UK composite PMI also all showing their prints here today. Here we see those kind of depicted graphically as well. Flashing forward into the old market snapshot, S&P 500 futures little changed at 4538.75. Stocks Europe 600 up 0.4% to 471.82. Nikkei up 0.3% to 28,804 and change. Shanghai Composite down 0.3% to 3582.60. Brent futures up 0.2% to 84.81 a barrel. Gold spot up 0.5% to 1792.58 per ounce. And US dollar index down 0.18% to 93.60. Euro up 0.2% to 1.1645. Overnight news out of Bloomberg. The Bank of England will likely defy investors' expectations of a sudden interest rate increase next month because it rarely shifts policy in such dramatic fashion, according to three former senior officials. The ECB will supercharge its regular bond buying program before pandemic purchases run out in March, according to economists surveyed by Bloomberg. Euro area businesses are reporting a sharp slowdown in activity caused by an aggravating global supply squeeze that's also producing record inflation. French manufacturing output declined at the steepest pace since coronavirus lockdowns were in place last year, while growth momentum deteriorating sharply in Germany, purchasing managers report. Private sector activity in the euro area slowed to the weakest since April, though it remained above a pre-pandemic average. China continued to pull back on government spending in the third quarter, even as the economy slowed, with a cautious fiscal policy reflecting the desire to deleverage and improve public finances. And President Joe Biden said the U.S. was committed to defending Taiwan from a Chinese attack in some of its strongest comments yet, as the admin faces calls to clarify its stance on the democratically ruled island. News squawk. Back over to Asia. Tencent blames WeChat access for search engines on loophole. JP Morgan's Yang joins Primus Asset Management's credit trading team. Gold rises on weaker dollar to head for second weekly gain. Interest payments made. Junk bonds rally. Evergrande update. And we'll talk a little bit about that here momentarily. Other top European news. UK-France power cable has unplanned halt. National grid. Banks prepare to fight Basel over carbon derivatives rule. Wise slumps after founder Henricus offloads $112 million stake. And London Stock Exchange says supply chains to delay tech spend. Aside from that, the event calendar this morning got a few things coming up at 9:45 a.m. Eastern. October market U.S. Composite PMI, prior print was a 55 even. October market U.S. Services PMI estimate at 55.2, prior was a 54.9. October market U.S. Manufacturing PMI estimate at a 60.5, prior was a 60.7. 10 a.m. Fed's Daily discusses the Fed and climate change risk. Yep, we'll have to see how that fares. And at 11 a.m., Powell takes part in a policy panel discussion. And of course, the market is going to hang on his every word for any sort of guidance whatsoever. Aside from that, on the old earnings report here today, we got a couple coming up here today. We got American Express here before the open. They should be reporting. Honeywell, Autoliv, Regions Bank, couple to name a few. Next week, we'll see a whole new smattering of folks to do their reporting as well. Aside that, talk a little bit about cryptos. Yesterday, this came through. Cryptos slide, the result of an 80% off Binance Fat Finger. Perhaps this might have missed your feed, I don't know. But exactly 7:34 a.m. Eastern, with Ethereum trading in record territory, at Bitcoin not too far from its own all-time high, hit just hours earlier, the crypto space was slammed with what appeared to be a liquidation order, one which immediately halted the upward momentum and sent cryptos sharply lower, perhaps just as intended. So, getting into this a little further, it says, as Bloomberg notes, either someone like an enterprising short who is deeply underwater and desperate for any trick to push momentum lower, was in a huge hurry to dump Bitcoin, even if it meant taking a big loss on the trade, or we had a legitimate fat finger trade because at precisely 7:34 a.m. Eastern, the price of Bitcoin appeared to plunge about 87% on Binance's U.S. exchange, sinking to as low as $8,200 from around $65,000. Yeah, how would you like to lose your tail on that one? Well, the price, which quickly snapped back to where it had been, and which was not repeated on other venues, was, however, enough to immediately crush momentum and send Ethereum from an all-time high above 43.50 to as low as $4,000 a few hours later. According to Binance, volume on the exchange at 7:34 a.m., when the broader market was shocked by the fat finger, was 592.8 bitcoins, or just shy of 40 million at prevailing prices. To be sure, this is not the first time we have observed an outsized fat finger, as Bloomberg tongue-in-cheek notes mistakes like this happen often. Traders mess up details of their intended trades, entering the wrong price or order size. An erroneously large trade, as one example, can overwhelm an exchange's order book, leading up to a quick and massive decline. The entire U.S. stock market famously flash crashed back in May of 2010, a move which the SEC notoriously and hilariously blamed on one solitary person, Navinder Saro, who was subsequently sentenced to prison. And while that is, of course, accurate, the only question that matters is whether someone fat-fingered Bitcoin, a notoriously momentum-driven asset, on purpose, with the clear intention of crushing upward momentum, even if it meant millions of dollars in losses, which, however, would likely offset far greater losses on a standing short position if the trade managed to push momentum lower. That said, we doubt today's glitch whether accidental or premeditated, will do much to dent the upward wave in cryptos. Indeed, it happened on a day when Ether hit an all-time high today, following news that the Associated Press announced plans to use the Ethereum blockchain for election and sports feeds via the Chainlink network, confirming its differentiation from Bitcoin, which continues to be viewed solely as a digital gold store of value, while Ethereum is becoming the epicenter of decentralized finance and smart contracts, or, as Goldman put it, the Amazon of information. Not surprisingly, in its initiating coverage of the crypto space, Goldman sees Ethereum eventually overtaking Bitcoin. So, pretty interesting stuff. Probably not too many people caught that, but boy howdy. 66,996.28 down to 8,200. That's pretty significant, and hopefully nobody lost their tails on that. Outside of that, as we've talked about the economy here, the chips and that obviously having a major effect on new cars. It's obviously had an effect on used car prices as well. Used car prices hit new record highs, signals CPI's non-transitory surge is not over yet. Putting Team Transitory, comprising mainly of pro-Fed, pro-Biden commentators, to shame is another significant jump in wholesale used car prices, continuing to make new record highs. The latest data from Mannheim shows how the Bureau of Labor Statistics September print for used cars and trucks index is about to soar. The Mannheim U.S. Used Vehicle Value Index increased 8.3% in the first 15 days of October compared to September. From a year ago, the index is up a whopping 37%. So yeah, if you can't afford a new car, well, it looks like even used cars are going to be all the more expensive as well. Much of the surging used car prices have primarily been a function of global supply chain woes impacting new vehicle production, forcing consumers to buy on the secondhand market. Another factor has been falling inventories at dealerships, forcing them to continue accumulating used cars to replenish inventories as new car output slumps. And here we see the inventories at dealers remain well below historical levels, and we're somewhere down in the weeds down here. Since Mannheim data reveals the lag between high-frequency data and traditional data at the Bureau of Labor Statistics, says we noted after last month's CPI print that used cars will turn higher in coming months as Mannheim wholesale prices rebound, ending a 3-month streak of declines and modestly surpassing the prior high. And here we see that going up yet precipitously. As for the transitory camp, the latest surge in used car and truck prices may continue pushing up consumer prices that are weighing on consumer sentiment. And that's going through the floor at the moment. For much of 2021, surging used car prices have dented buying sentiment among prospective buyers. And here again, we see the Mannheim U.S. Used Vehicle Value Index in green. That's going up, while University of Michigan buying conditions for vehicle price going the opposite way. There are still no signs of used car prices slowing down as supply chain disruptions and global chip shortages persist. This week, there's a new report that aluminum, used in engine blocks, transmission cases, frames, paneling, and much more, could be in short supply in the months ahead. So, for the next CPI print, expect used car prices to be hot. So, bottom line, if you're in the market for a used car, chances are you probably want to try and find that now. Outside of that, shipping containers. We've talked a lot about what's going on at the various ports, not just LA, Long Beach, and the stack up that's there. Obviously, Ningbo, Shanghai, similar sort of deal there. But today we find out shipping containers from stranded ships abandoned in California neighborhoods. So I wonder if old Joe's plan is working to a T here. We'll soon find out. This out of Epoch Times. Shipping containers stranded for weeks at sea are now reportedly being abandoned in California neighborhoods. Anaheim Street in LA has become one of the locations where an overflow of empty containers now line local streets, as nearby UCTI trucking deals with more than they can handle under the local port's 24/7 operations. It's a bunch of neighbors that are very upset because it's a non-stop issue. Local resident Sonia Cervantes told CBS LA. Cervantes also said a container had blocked her car at one point. UCTI trucking owner Frank Aririan addressed the situation as the company experiences massive overflow to its usual 65 container spaces. Right now, at the ports and everything that's going on over there, we're stuck with the containers, having to bring them all to the yard, and we only have so much space, Aririan told CBS LA. Aririan hopes to strike a deal with local officials to access more space to meet the growth in operations. As of Tuesday, 100 container ships were reportedly waiting to unload in a LA port. Industry leaders claim the backlogs are partly due to the ongoing impact of the COVID-19 pandemic. The growing supply chain issues have led some to label it a crisis. Republicans have spoken out for more from the Department of Transportation. That one where Buttigieg is supposed to be, doing his thing. While Resident Biden addressed plans to improve shipping. Senator Cynthia Lummis said there is more that the Department of Transportation can and should be doing to help address ongoing supply chain issues related to the pandemic, in a statement to the Washington Examiner last week. The supply chain crisis led Biden to make new announcements last week to address congestion at some of America's ports. After weeks of negotiation and working with my team and with other major union and retailers and freight movers, the ports of LA, the Port of Los Angeles, announced today that it's going to begin operating 24 hours a day, 7 days a week, Biden announced. This follows a Port of Long Beach's commitment to 24/7 that it announced just weeks ago, he added. Biden called the effort a first key step to improving the nation's supply chain. The president's speech also announced the expansion of shipping companies to meet the growing demands. Additionally, FedEx and UPS, two of our nation's biggest freight movers, are committing today to significantly increase the amount of goods they are moving at night. FedEx and UPS are the shippers for some of our nation's largest stores, but they also ship for tens of thousands of small businesses all across America, he added. And I guess I'll add to that, too, that not only are LA and Long Beach open, but we've seen a stack up outside of Savannah, Georgia recently. And it looks like DeSantis is getting in on the game and saying that they're probably going to open some ports and that for folks down Florida way. And I think we may be starting to see perhaps some shipping companies start to redirect and perhaps go that route as well. So aside from that, back to the Bitcoin side, Walmart rolling out Bitcoin ATMs across 200 stores nationwide. So it begs a question here, and I guess I'll pose this to the audience and listeners. Do we think Bitcoin and digital cryptos and that are here to stay? Do you think the Fed really has a chance if they're starting to roll this out and kind of mainstream this at this point by way of Bitcoin ATMs? It's going to be awful doggone tough to try and undo all that by way of FedCoin or what have you, right? So it seems like this is where things are headed. It says while adoption of cryptocurrencies is accelerating among the investor class, rapidly enabled by this week's launch of the first Bitcoin futures ETF, it appears that even broader adoption of digital currencies into day-to-day life and mom and pop may be about to escalate dramatically. Reuters reports that Walmart customers at some of the U.S. stores will be able to purchase Bitcoin using ATM-like machines installed by Coinstar. Coinstar, known for its machines that can exchange physical coins for cash, has partnered with digital currency exchange ICYMI to let customers buy Bitcoin at some of its kiosks. It says a Bitcoin-enabled Coinstar kiosk at a Walmart in Warminster, Pennsylvania. Interesting. Coinstar, in partnership with ICYMI, has launched a pilot that allows its customers to use cash to purchase Bitcoin, Walmart Communications Director Molly Blakeman told CoinDesk via email. There are 200 Coinstar kiosks located inside Walmart stores across the United States that are part of this pilot. So how does this work? Well, this is all good news for those who see the network effect building more sustainable value in Bitcoin. But as CoinDesk.com reports, there are also some quote-unquote complications. After inserting bills into the machine, a paper voucher is issued. The next stage involves setting up a ICYMI account and passing a Know Your Customer check before the voucher can be redeemed. The machine charges a 4% fee for the Bitcoin option, plus another 7% cash exchange fee, according to the Coinstar website, and verified by CoinDesk. And so here's Buy Bitcoin with 4 easy steps. That's considerably more complicated than a standard bank ATM, and we suspect may leave a few eager adopters holding back. Large retailers need to make sure they know the vendor they're getting into bed with and what that organization is doing to manage risk, Seth Sattler, compliance director of BTM provider Digital Mint, said in an interview. However, as CoinDesk notes, the crypto ATM industry is expanding at a rapid pace, partly fueled by the COVID pandemic. Coinstar announced plans in 2020 to double its fleet of 3,500 CoinMe BTMs amid a spike in usage. More recently, Coinstar, which started adding Bitcoin buying services with CoinMe in early 2019, added 300 Bitcoin-enabled machines at Winn-Dixie, Dresco Yamas, Harvey's, and other grocery stores across Florida. There are now almost 30,000 crypto ATMs worldwide. And it says, but Walmart, with 4,700 stores and a market cap of $409 billion, long seen as a crown jewel to bringing crypto financial services into the mainstream, is another step in the evolution of cryptocurrencies in everyday life. And no, this is not another Litecoin-like hoax. So again, the question remains, in my mind, is this something that is going to be readily adopted by the populace at large? Trading dollars for cryptos? Perhaps. And if that is indeed the case with the rollout of what we're seeing here, how hard is it going to be to put the genie back in the bottle by way of the Fed? Or the banks does? Or the Elizabeth Warrens? Or anybody who wants to try and prevent this from happening? To me, it seems like the train is well down the tracks. Outside of that, back over to China and Evergrande, as mentioned in the opening piece, China's Evergrande makes last-minute interest payment on dollar bond, avoiding default. This is in a surprise 11th-hour development. China Evergrande made an overdue interest payment to offshore bond holders. The state-owned Securities Times reported Friday, an unexpected move that allows the property company to postpone, if not avoid, a default. The Chinese property developer sent $83.5 million to the trustee for the dollar bonds, and that financial institution will in turn pay bondholders, reported the Securities Times, which is run by the Communist Party's flagship People's Daily newspaper. As reported earlier, this weekend was a deadline for a 30-day grace period before bondholders could send a notice of default to the company after it failed to make the interest payment on about $2.03 billion of dollar bonds on September 23rd. A default by Evergrande, which is China's second biggest developer and its most indebted, and which late last week made a payment on onshore bonds, would have spiraled into the biggest corporate default in Asia, as it would also enable creditors to declare cross defaults on some of Evergrande's other debts. However, with its liquidity effectively frozen, its real estate sales plunging 97%, and its asset sales attempts a dead end, while Evergrande may have kicked the can this time, the company, which has the equivalent of more than $300 billion in total liabilities, including some $89 billion in interest-bearing debt as of the end of June, is still facing a virtually certain default in the coming weeks, when many more coupons and maturities come due. Most international bondholders had expected Evergrande to fail to make its dollar bond payments before the end of the grace period. The company has also skipped other coupon payments in the past few weeks and has outstanding dollar debt with a total face value of about $20 billion. Advisors to international bondholders said this month that they had made little progress in their efforts to engage with Evergrande. On Wednesday, however, the Shenzhen-headquartered group said in a regulatory filing that it will use its best effort to negotiate for the renewal or extension of its borrowings or other alternative arrangements with its creditors. As also reported earlier, Evergrande has been trying to raise funds by liquidating assets such as stakes in subsidiaries and a Hong Kong office building that it owns. The company had also planned to sell a majority holding in its property management unit for the equivalent of about $2.6 billion to a smaller rival, but said that this week it had terminated that deal. The news of the failed deal sent Evergrande stock tumbling on Thursday after it was unhalted after 3 weeks of being frozen. So I'll break from that there because they start to get into what some of the other various folks that are invested in them think where this is going to go. Bottom line, finally, Evergrande may have averted a default in the last minute. It's only kicked the can for a few weeks, as the following distribution of debt interest and maturity payments shows. And so here we see interest in yellow here, corporates in blue. Yeah, they've got a few coupons coming due all the way to and through 2024. Quite a few coming up here late 2021 into 2022. We'll have to see whether or not this contagion is indeed contained or not. And if not, what is that going to do to the rest of the folks invested worldwide? It looks like things are about to unravel. Outside of that, COVID propaganda roundup, the planned supply line demolition. It's the feature, not the bug. That's out of Ben Bartley over at the Daily Bell. The latest updates on the new normal, chronicling the lies, distortions, and abuses by the ruling class. We have an incredible opportunity to create entirely new sustainable industries, products, services, and supply chains, said His Highness, the unelected Prince of Wales, in the inaugural Great Reset speech to the World Economic Forum back in January 2020. Back then, all signs pointed to this novel coronavirus being just another in the SARS lineage, an obscure, emergent viral pathogen that would dominate the headlines for 2 or 3 24-hour news cycles and then flame out somewhere in Asia. Unbeknownst to the rabble and the lower socioeconomic strata, the World Economic Forum had already set the multinational wheels of economic revolution in motion. The corporate state media would have you believe that the Great Reset is just a reaction to the pandemic. Klaus Schwab and his Nostradamus-like prescience somehow managed to write an entire book between January and July 2020, before anyone in the public knew anything substantial about the virus, detailing how COVID-19 would be used to reflect, reimagine, and reset our world. This is a lie. And of course, the ever infamous Best of 2016, Welcome to 2030. I own nothing, have no privacy, and life has never been better. Right? Thank you, Davos man. On the contrary, the social engineers had meticulously planned the Great Reset going back decades. But, just like the American neocons needed 9/11 to invade a decade and a half before, the multinational elite of Davos, World Economic Forum, and UN needed a precipitating event that could afford the public consent they needed to institute drastic change. Justifying a lockdown of the internationalized economy, the source of the current supply chain crisis, would have been impossible without the handy excuse of a global pandemic. Through an orchestrated media fear-mongering campaign, they had the ammunition they needed to obliterate the public's psychological defenses. And of course, here's all the fear campaign. The whole aim of practical politics is to keep the populace alarmed, and hence clamorous to be led to safety, by menacing it with an endless series of hobgoblins, all of them imaginary. H.L. Mencken. And global shipping has been hit by the coronavirus. Now goods are getting stranded. According to CNN, as far back as February 2020, the supply chain destruction caused by the international decision to lock down commerce, not the coronavirus itself, was already evident. Corrective action could have mitigated the damage, at the very least. The social engineers pressed forward, full steam ahead, anyway, because global economic collapse was the feature, not the bug. So far, from an unforeseen byproduct of well-intentioned public health measures, the near total supply line collapse is just another domino in a global game that serves a very particular agenda, not yours. To reimagine something entirely new implies the destruction of the old. So destruction is what you get. International Chamber of Shipping, ICS, warns of system collapse. We are witnessing unprecedented disruptions and global delays and shortages on essential goods, including electronics, food, fuel, and medical supplies. Consumer demand is rising, and the delays look set to worsen ahead of Christmas and continue into 2022. Gallup poll: 60% of U.S. adults now unable to get products they need. 60% of U.S. adults say they have been unable to get a product they wanted in the past 2 months because of shortages, and 57% have experienced significant delays in receiving a product they ordered. Multinational corporate chains charter private vessels to move product. The cost to lease a ship is $1 million to $2 million per month, plus operating costs. Renting the containers can add on several $100s, and the biggest retailers are using between 500 and 1,500 containers per month. The companies chartering ships now have more flexibility and can avoid congested ports. The capacity to contract with private shippers is convenient for Walmart, Target, and other offshore multinational corporate behemoths. But American small businesses typically don't have an extra million in cash to splurge on these leases, or the scale to make it worthwhile. What will happen to them, then? They'll get a one-way ticket to Great Reset Oblivion. Oh, there's a headline. COVID-19 closures killing millions of small businesses. That's the feature, right? National Academies of Sciences lockdowns produced no public health benefit. Shocker. The biggest travesty of all is that none of this economic punishment produced any of the promised public health benefit. Via National Academies of Sciences, previous studies have claimed that shelter-in-place orders saved thousands of lives. But we reassess these analyses and show that they are not reliable. We find that shelter-in-place orders had no detectable health benefits. World Economic Forum: we must prepare for an angrier world. Where is all of this headed? The calculus goes like this. Forced economic shutdowns will wreck national economies. Economic hardship will lead to even more political anger. Unhip to the international crime syndicate headed by the World Economic Forum, UN, and World Health Organization, citizens will blame their national, local level leaders. Local national governments will become unstable. The political ground will be fertilized for international level intervention to correct the problem created by internationally led economic lockdowns of the global supply chain. Political sovereignty of the various nation states will be further undermined, and the international political regime, the so-called New World Order, will gain traction. Understand that none of this happened by accident. The big lie. In the corporate media, the narrative goes, golly gee, no one could have predicted that the supply lines would collapse and drag the economy into the gutter, pushing tens of millions worldwide into starvation and collapsing the entire globalized economy with interdependent supply lines that depend on international shipping across national borders. The truth: the World Health Organization, the UN, et al. Are arsonists. COVID fear is the gasoline. The lockdowns are the blaze, and the first world is the building on fire. A note on the multinational corporate angle. The Fortune 500, in the aggregate, spend billions upon untold billions on market research and forecasting. To believe that none of them foresaw the fallout of lockdowns would be naive. They did portend the future and consented. Along with multinational governing bodies like the UN, the multinational megacorps are the vehicle of the global corporate technocracy. Not, as Americanized libertarian ideology claims, its antidote. The good news on this front is that right in the West, the only hope at this point of non-feudal resistance has appeared to awaken in the past year and a half. The very tiny proportion of the GOP that is not fully comped by the corporate state, like Rand Paul, Ron Johnson, et al., have taken baby steps towards acknowledging the global tyrannical ambitions of the corporate state publicly, but they must step harder on the gas. The time for half measures is past. So there you have it. I think that pretty well lays it out. It's not like this was born in a vacuum. All these corporations, the Walmarts, the Home Depots, you name it, they knew exactly what they were doing. And it doesn't matter at this point because they lobby folks. They put things on K Street in D.C., lobby to get things to favor their business. And it's just the price of doing business with government. What comes around goes around, right? You pay them to get favorable legislation that they write, buy off the Powells to make it pass, put it on the books, to benefit them, not us, of course, fatten their bottom lines. And of course, well, when good old government comes down with the edict from on high, well, the old corporations just got to dance to the tune, right? That's exactly what we're seeing play out. So good read there. Aside from that, back to cargo. As of right now, and as mentioned, 100-some container ships sitting outside of LA Long Beach. A record $22 billion worth of cargo is now stuck on container ships off California, out of freight waves. There was fleeting hope that Southern Cali port congestion had turned the corner. The number of container ships waiting offshore dipped to the low 60s and high 50s from a record high of 73 on September 19th. Trans-Pacific spot rates plateaued. The Biden admin unveiled aspirations for 24/7 port ops, and electricity shortages curbed Chinese factory output. The reality is that the port congestion crisis in Southern Cali is not getting any better. The time ships are stuck waiting offshore continues to lengthen. There are simply too many vessels arriving with too much cargo for terminals, trucks, trains, and warehouses to handle. Didn't we just cover that by way of the guy stacking these containers up, infringing on, their neighbors? There were 103 container ships at LA Long Beach terminals or waiting offshore on Wednesday, an all-time high. Offshore, the number of ships at anchor or in holding patterns is once again nearing record territory. According to the Marine Exchange of Southern Cali, 70 container ships were waiting off LA and Long Beach on Monday, 67 on Tuesday, and 71 Wednesday, not including other cargo ships that are loaded with boxes. Massive value of cargo stuck offshore. Marine Exchange data shows that ships waiting offshore on Tuesday, including container ships, general cargo vessels, and other ships carrying containers, had aggregate capacity of 512,843 20-foot equivalent units. To put that in perspective, that is 10% more than the Port of LA imported during the entire month of September. Assuming ships are at capacity, how much cargo value is out there in the floating warehouse? What's in each box, and its value varies dramatically. It can be worth a few $1,000s or several $100,000. But Port of LA stats provide a good guide. The total customs value of the Port of LA containerized imports in 2020 was $211.9 billion. Given that imports totaled 4,827,040 TEUs, this equates to an average of 43,899 per import TEU. Several other sources also estimated average cargo value at around 40 grand per TEU. This suggests that the cargo currently waiting off the ports of LA and Long Beach is worth around, $22 billion, roughly the equivalent of the annual revenues of McDonald's or the GDP of Iceland. Imports trapped on ships for over a month. Data from the Signal platform shows that the wait time from Anchorage to berth in LA rose to an all-time high 13 days on Wednesday, up 65% from the beginning of September. But the average wait time doesn't tell the full story. Ships have been sitting in San Pedro Bay for more than twice that long. Most of the vessels that still have no terminal berth assignments, despite extended wait times, are small ships operated by Chinese players such as BAL Container Line that entered the Trans-Pacific market for the first time this year. Some of the ships stuck in the queue have been chartered at exorbitant rates, raising the question of whether charters accounted for such lengthy delays. American shipper was contacted by U.S. manufacturer who has over 100 containers of goods trapped aboard the Chinese-owned Zhanggu Shangsu. The ship has been waiting offshore for over 5 weeks, since September 13th, and has yet to obtain a berth assignment, according to the Marine Exchange Master Queuing list. The U.S. manufacturer, who booked through a freight forwarder, spoke on condition of anonymity. "This is really impacting our production," he said, noting that the trapped goods are a major component in this company's manufacturing process. "We can't get any type of help or get any type of escalation from anyone," he said. He was told that the ship operator hadn't negotiated with the terminals for a berth before arrival, which led to the extended delay. Among the Chinese-linked ships with no berth assignment stuck in the queue, the Martinique has been waiting the longest, since September 9th. Lodestar reported that it's on charter to transfer, which is owned by a Chinese logistics provider that is in turn partially owned by Chinese e-commerce giant Alibaba. The BAL piece has been waiting without a berth assignment since September 25th, as has the S. Santiago. According to Alpha Liner, BAL is chartering the S. Santiago for around $125,000 a day. An industry source told American shipper the rate was $135,000 per day. So far, that ship has been waiting and not loading any more revenue-generating cargo for 26 days straight. And of course, there's some reports out there too that they may institute getting the old National Guard involved, perhaps opening up some ports in in San Diego for the military. Who knows whether or not that's going to happen. But I'm going to kick a piece out here. I've been meaning to here for a little bit here, sitting on a couple pieces. It also highlights some of the things that happened in California by way of some edicts and decrees and things of that nature that are also causing this that are not really being talked about much. So look for that here a little bit later today. Outside of that, Beyond Meat implodes after reporting catastrophic third quarter sales. So yeah, fake meat, well, apparently people just ain't buying it. Confirming yesterday's observation that the market is quick and merciless to punish any and all stocks that miss expectations this quarter, moments ago, Beyond Meat plunged 14% after reporting preliminary net revenue for third quarter of about $106 million, missing the estimate of $134.3 million by, just about 30%. And a huge disappointment to the company's prior guidance, which was $120 to $140 million. As Bloomberg notes, while the company's previous third quarter guidance anticipated a sequential decline in net revenues, the deceleration was far larger than anticipated. The company said that multiple factors contributed to the shortfall during the quarter. Demand was impacted by broader ongoing macro and microeconomic factors, including, among others, the effects of COVID-19 Delta variant. Challenges in operations that led to unfulfilled orders. Company experienced decrease in retail orders that persisted longer than expected from a Canadian distributor. None of this mattered to investors, who now see that just round after round of excuses from the management team, which will soon be on the chopping block unless it manages to restore some of the company's previous growth. Well, here's a thought. What if the people have spoken? What if the market says, meh, I don't think we really want this fake meat, and we're not going to buy it, regardless of where you try to sneak it in, either at the grocery store, and or if you try and sneak it in to your fast food chains, things of that nature, and they say, nah, we'd rather have the real deal. Maybe there's an element of that to that as well. Outside of that, some other interesting news on the day. Facebook announces new censorship for groups. So yeah, this on the heels of, what was it, last week before, we had the quote-unquote whistleblower. I think we kind of knew this was coming. Says Facebook seems to be attempting to respond to the most recent round of criticism against it and deflect from it by doing more, with an announcement that new censorship measures are on its way. Yeah, thank God we've got more truth platforms firing up, because Facebook, I think you're on the way to being in the dustbin of history. This time, they concern groups whose members' posts will be demoted if Facebook determines they had violated its guidelines in other places on the giant network, meaning that their group posted content can still be in line with Facebook's rules without having broken any. The downranking will apply to all content posted by these users in a group. The intent is to isolate group members from their peers in the same community for what Facebook determines were transgressions committed elsewhere. Oh, so their systems, I guess, basically remember you. I guess. I don't know how they plan on doing that. What, by IP address? What if you use a different name on Instagram or WhatsApp? How are they going to do that? Or is it just the fact that perhaps you're using the same screen name across all their umbrella figures, what have you? By isolating group members in this way, visibility and therefore communication would be reduced inside groups, especially those Facebook or its critics and entities exerting pressure on it disapprove of, since such users' content would already have been penalized elsewhere on the network. Facebook would like to make groups an important part of its platform, but critics say they are breeding ground for toxicity, extremism, and divisiveness, and are pressuring the company to impose stricter censorship rules. Yep, First Amendment be damned. Another move that Facebook is making to appease its detractors is to essentially co-opt group admins and moderators as unpaid content moderators. They will now have at their disposal a tool called Flag by Facebook, which admins will be able to use to censor group members before Facebook, having already flagged the content for removal, does, and slap those misbehaving with strikes. With Flag by Facebook, admins will on one hand, be able to see the flagged content and try to react to prevent censorship, and will be incentivized to do so because strikes received by group members affect the status of the group itself. The giant still allows admins to file appeals and, as reports put it, ask Facebook to explain why the post breaks its rules. Bearing in mind the utter disregard big tech social platforms have had for such questions and appeals, it's not likely that this feature will be of any particular use to group admins and moderators. Bottom line, get off Facebook. There's an idea. By the way, Gab has groups. Get over there. Outside of that, yesterday, Garland was on the Hill. This out of Liberty Nation News says Garland on parents protesting CRT, not domestic terrorists. Interesting. So Attorney General Merrick Garland testified before the House Judiciary Committee on October 21st and, as expected, faced challenges from GOP lawmakers on key issues. In particular, Garland was grilled over his recent decision to involve the Department of Justice and local disputes between school boards and parents regarding the teaching of CRT. Still, the AG has provided no credible justification for what appears very much to be a case of politically motivated government overreach. It seems the AG thinks it's acceptable for the DOJ to intimidate parents who are angry that their children are being taught racist dogma because some teachers or members of school boards have allegedly received violent threats. It is a weak excuse indeed. If the FBI went every person in America who threatens someone else with violence, it would need to hire maybe, 100,000 additional agents. Why, in the case of parents versus school boards, then, do the feds suddenly feel the need to intervene? If it is not to silence political speech, then it can only be because the DOJ considers parents' berating of local education officials a potential threat to national security. That is, terroristic. First Amendment rights? Well, Garland insisted at this hearing that this is not the case. However, I want to be clear, he told the committee. The Justice Department supports and defends the First Amendment right of parents to complain as vociferously as they wish about the education of their children, about the curriculum taught in the schools. The AG added later that he can't imagine a situation in which the actions of angry parents would be labeled as domestic terrorism. Problem is, Garland's October 4th memo on the subject of DOJ involvement in boards of education disputes came just days after a letter sent by the National School Boards Association to the White House suggested the protestations of enraged parents were, quote, equivalent to a form of domestic terrorism and hate crimes, end quote. Coincidence? That is unlikely. It would seem to be an exercise in cognitive dissonance to dismiss the obvious assumption that the AG, probably at the direction of the White House, even though Garland denied this, issued his memo as a response to the NSBA's letter. The man whom former President Barack Obama tried unsuccessfully to put on the Supreme Court doesn't perform well in front of the camera, nor in the face of tough questions, or even easy ones, it seems. He stutters and stammers even more than former special counsel Robert Mueller, which, as was the case with Mueller when he wrapped his ludicrous investigation into the non-existent Trump-Russia conspiracy, suggests a guilty conscience, a knowledge that what he is doing is neither fair, nor apolitical, nor constitutional. Congressional theater? Of course. Americans learned nothing new from Thursday's hearing. Congressional hearings, or those that are open and televised anyway, have no point to them at all, other than to get public officials on record so their dishonesty or evasiveness can be revisited at a later date. Party politics aside, it's always the same story. The government officials being questioned will say whatever he or she believes the interrogator wants to hear, regardless of what is really going on behind the scenes. Since there are no serious penalties for lying to Congress, unless one is an associate of former President Donald Trump, nothing said during a congressional hearing is of any consequence. If politicians were not obsessed with grandstanding for the viewing public, there would be only closed hearings, and people like Merrick Garland would never have to worry about exposing themselves to a critical American public. The question remains is whether the DOJ will in fact take any action against concerned parents or quietly distance itself from the issue, having appeased the radical left by appearing to show concern. Yeah, that is the question. And by the way, not to mention the old conflicts of interest, because he's only got a daughter that's married to a guy who has got all of the publications out there pushing all of this stuff, right? I guess, the American populace must be too stupid to see that. But I digress. Last but not least on the morning, incredible. Woman gives birth to 14-pound baby after 19 miscarriages. Interesting piece here out of Flag and Cross. It says, many moms bond by sharing their pregnancy and birth experiences. While every pregnancy is unique, Carrie Patanai and her chunky monkey, Finley, are making the news because of just how unique their case is. Tim and Carrie already had 2 sons, Devlin, 10, and Everett, 2, and Carrie was no stranger to large babies. Both her boys had been born via C-section, with Devlin coming in at 8.2 pounds and Everett coming in at a very respectable 11.1 pounds. At the beginning of October, Carrie was 38 weeks pregnant with what they already knew was going to be a strapping young lad. The baby's estimated weight was a cool 13.8 pounds. Carrie was already scheduled for a C-section that week, but when she went to a checkup on October 4th, that timeline got moved up a bit. My water broke on the scale as I was getting weighed, so my scheduled C-section got moved up a day, she said, according to Fox News. So, off to Banner Thunderbird Medical Center in Glendale, Arizona, they went to meet their newest addition. He was so big, plus I had almost double this amniotic fluid, so to say I had a big baby belly and that I was absolutely completely uncomfortable isn't enough, Carrie said. However, I would do it all over again if I had to get this blessing. The not-so-little dude was born via C-section on October 5th at 1:56 p.m. and has been impressing people near and far with his staggering size and supreme squishiness ever since. Family quickly realized the clothes and diapers they'd prepared for Finley's arrival simply would not do, and they had to go out and buy larger sizes of everything, just to fit the boy. Both mom and baby appear to be doing well now, though they understandably experienced some side effects. Carrie had some initial hemorrhaging and has major surgery to recover from, and Finley had to stay in the NICU for 8 days because he had breathing issues, jaundice, and high bilirubin levels, according to a post Carrie shared. The separation would be difficult for any mother, but it proved extremely difficult for Carrie, who has a history with loss. It triggered a lot from my previous 19 miscarriages, leaving the hospital without a baby, she said, according to Fox. I knew it was for a good cause and he was in excellent care, but it still was extremely hard for me to emotionally handle. The reason I've had 19 miscarriages is due to my blood clotting disorder and fibroids. It's been beyond hard to go through. But Finley came home eventually, and the family has been soaking up all the baby cuddles and enjoying their beautiful baby boy. I am so happy. Tim is happy, Finley is happy, and snuggly and oh so squishy, Carrie shared in the birth announcement post on Facebook. Devlin and Everett are missing us and ready for us to come home. I'm so thankful and so blessed. As the days passed, Carrie discovered just how special Finley was. He wasn't just a big baby. He was one of the biggest, propelling the family to fame. I saw my doctor today. Oh my goodness. Finley is the biggest baby he's ever delivered, along with another OBGYN of 27 years and a nurse that was there during my C-section. She shared in her post. It was incredible. He is a talk of the hospital. My doctor is going to do some research and see what we can do. We really think we've broken a record. Finley was a little celebrity at the hospital, she said. According to Fox, nurses and docs were non-stop talking about him. He is quite tall, too, at 23 3/4 inches. Carrie also wants other moms to take hope from her story and to be encouraged. I think it's important for other people to know there is hope behind all of those closed doors, and that they aren't alone as they are going through their own trying times, she said, Fox reported. Every woman has a different path than the next. Some are easier and some are harder. What matters is that we support each other with love, care, and respect. An article originally appeared over on the Western Journal. So, close with that here this morning. Appreciate you guys tuning in. As always, a lot of ground to cover here this morning. So, a little bit of a lengthy one here this morning. But, yeah, aside from that, look for the other piece in that. I'll probably get that kicked out here today. And of course, if you missed it last night, I was over on the Soapbox. You can catch the replay of the live portion of the broadcast over on the archives on DLive and Twitch, etc. I'll probably get that kicked out here in the next day or so as well on the backup platform. So that being said, as always, appreciate you tuning in. We'll see you back next week. Take care. God bless everybody.